Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at the IWM, which is the ETF for the Russell 2000. We're going to be doing our Elliott wave analysis first and then wrapping things up with some basic technical analysis near the end of the video. So, first thing I want to talk about today is the fact that I am genuinely surprised that the Russell did not make a new high last week, has still not taken out its March high, and is still kind of just drifting sideways. With the rotation back into your mega caps and your tech stocks, the Nasdaq roared away on Friday. Phenomenal. And on Thursday, and the thing's just looking so bullish now. I do think we're approaching a temporary top in the Nasdaq. It could be the top. I don't have a count which supports that anymore. Things just look bullish. It's more likely just a temporary top. Same with the SPY and the Dow. All the major indices pushing to pushing higher. Dow not quite making a new high, but it will get there, I think. Now the IWM, however, has just been tracking sideways since March, and the meme stocks, which are quite heavily weighted in this index, have also been doing the same. Obviously, ever since reaching the highs, GME has been floundering, and same with some of the others as well. So we've just been kind of in this consolidation pattern, and I'm still expecting this thing to break higher. My preferred count is that we've completed the primary wave 4, and we're now going to move higher into a primary wave 5, which I'm basing off of parity with the primary wave 1 back here. So if I just show you what I mean quickly, if we take the length of our primary wave 1 and we just project it from our completed primary wave 4, you can see we get a white line up here at 278.23. This is roughly parity with 1. We don't have to come up this high, we only have to just pop ourselves above the previous high from an Elliott wave point of view, and then we could potentially sell off. But we've been I've been expecting this to make a breakout for a while now, and it's just not doing it. So there is a bearish count which just simply refuses to die, which is that the market has topped, and we've just been putting in a complicated top before breaking down. It's still not my preferred interpretation. I think the Russell will break higher eventually, and I'm still expecting it to do so. Now, a couple of things though that have got me curious. So let's take this, our pitchfork for our primary 1, primary 2 from our March 2020 low. Now you can see this is very precisely encompass all of our primary wave 3, or our proposed primary wave 3. We're going to throw over in the intermediate 3 of the primary 3, which is very normal. We've already spoke about the peak of our RSI reading here around the 10th of February. This was the 3 of the 3. We haven't had an RSI reading as high since, so this felt very much like the 3 of the 3, and we're now completed the 3, completed the 4, and should now get moving higher. However, on the wave degree, primary wave degree off our initial pivot 1-2, we have fallen out of this channel. We've back tested the 61.8 here, come out of it, almost back tested the outer bound of the pitchfork, and we're still kind of lumbering around. So perhaps this initial pivot off of the 1-2, this is no longer relevant to the recent price action, and we need to readjust for what will be more of a meandering fifth. So all I'm looking at really that I think it's not particularly compelling, but it's something to consider. If we just hide that pitchfork for a minute, and we take the pivot from the 2 to the 3 to the 4, assuming this triangle pattern is complete, and we have completed the 4. So if we take this swing, now I'm using, instead of using a conventional setup for the pitchfork here, I'm using a shift pitchfork instead. So now when we look at it from here, we can see obviously the price action since has been neatly contained within it. It doesn't necessarily mean anything yet. We've had this move off of the wave E of before the completion of this contracting triangle. We've had what looks like 5 waves up, 1, 2, 3, 4, 5, and we've tagged the median line to the tick here, and then we've since sold off. come back up into this 38.2 level between the 50 to 38.2, come back to the 61.8. So it's one of those things where when you see these kind of patterns price action play out over a long period and you get multiple levels of confirmation within the pitchfork, it's easy to say yes, look, it's obviously in play. This is early days. We've got a tag on the median line, down, up to this level, down to this level, 2 touches on the 61.8 here. Maybe this shift pitchfork is laying out the future geometry for this process, or this progression to new all-time highs and a completion of a 5th primary wave. Of course, we don't have to. It doesn't have to take this long. It doesn't have to go this high. We could come up here in a hurry. 1, 2, 3, 4, 5. Tag the edge of the outer pitchfork. I don't know. I'm just suggesting it as a way of keeping track on the current, geometry of the market. Having left that initial pitchfork, perhaps this is now in play. It does seem to be a nice fit, but it's too early days to really rely on it. We'd want to see another move up respecting these levels over time. So another thing I want to look at is the retracement of this wave 4. Okay, because it is pretty shallow. So there's argument afoot that perhaps you could suggest a greater correction is actually underway, a more time-consuming correction. So you can see that with this contracting pattern we've had inside of this triangle, where we've had the 3, 4 on the intermediate time frame, into the primary, into the intermediate 5, into the primary 3. We've gone A, WXY, B, A, B, C, C, D, and then E. I wasn't particularly happy about finishing the triangle this way, but since we've had this overlap of this price movement here, this does count clearly as an impulse, so I decided to count this as a 1. We do see though that after we contract low, higher low, higher low, higher low, the E and the prior pivot both finish straddling the 23.6, which is a typical wave 4 retracement. It's a shallower wave 4 retracement, but for a triangle it does make sense. We've contracted, we've had quite a time consuming correction, but a shorter one in price. The 38.2 is still a possibility, but the thing is, we having produced this triangle at primary degree 4, our intermediate 4 is literally in the same price territory. You see, this is why it's been a shallow correction. Here's our prior degree, intermediate degree 3, 4, because we got that really short 5th wave, and therefore completely retracing back into the prior wave 4 didn't require a deep retracement. We're already within it from the moment we're trading this triangle, so we've actually just traded down into a narrowing range within the prior wave 4 and completed our E within the prior wave 4 as well. So yeah, this looked and still does look really, really bullish. Big build up of activity here. We can see in the volume profile this is a big basing area here, just as we saw a big basing area around here around the primary 2, big gulf here for the primary 3 because we came up in such a hurry. Yeah, this was the explosive move in those meme stocks really, and just general rotation back into small caps on the hope of recovery. You get the idea. So this is all still pointing towards a big bullish drive up. But, caveat, we have not broken a new high since March. So it really has been quite a lackluster performance, going sideways. We're now into July. So maybe, excuse me, just maybe, we have been topping out. It's not my preferred count at all. So we're just going to pop over and have a quick look at that now. This one here. So the bearish interpretation, we get a 1-2, but this wave 3, primary wave 3, subdivides with a short move in the primary 5, rather than the intermediate 5 into a primary 3. We get a 1, 2, 3, 4, 5. Now, obviously the advantage of calling the top here from a geometry perspective is when we look at our initial pivot, swing high, swing low, with our wave 1, 2 at primary degree. All of the price data to the high is contained within this single pitchfork, and we have now fallen out of it, and we've been testing the outer bound of it. We've recently had a test of the outer bound right here on the 28th of June. So this kind of looks like we've come into a top and we're just leaving prior market geometry behind, leaving prior structure behind by just wasting time, ticking down the clock, running down the clock until we move sideways and then potentially finally give it up. Now, like I said, not my preferred count. We've been hanging around here a long while. We've had plenty of time to break down if we wanted to. Counter argument, we've had plenty of time to break up if we wanted to. But the way we count this, 3, 4, 5, cycle wave 5 complete. We'd have to have a wave 1 move down here, and then the deepest wave 2 of a major index I think I've ever witnessed at any time degree. If we just come down and check the retracement, we've already gone through 90% and we're just a couple of ticks off retracing 100%. And of course, if we retrace even a tick more, then it's invalid, and we can't call it a wave 2. So 32 basis points within the high. We're basically there. So yeah, I thought it was compelling. Why interesting? Well, maybe not compelling, but interesting at least, that we should look at the small caps, because we've seen the bullish activity in the major indices last week was phenomenal, and no answer here in the IBBM. Total lackluster performance. Not even an attempt to move higher, but no massive breakdown either. So the rotation back into the mega caps, back into the tech, has been within the large to mega cap area in the broader market. So from value back into growth, it hasn't really had an impact here at all in the IWM. Nothing's really happened here in the small cap and the Russell 2000. So this could be a basing of a wave 4 prior to a rotation back into small caps, or at least a ripple effect if we move back out of growth. So if the Nasdaq is about to correct, about to top out on a shorter time degree along with the SPY after such a run up, then maybe this is the time that small caps will pick it up. Or the weakness we've seen here since March could be an ominous sign of the overall poor breadth of the market and weakening of the market. We will have to wait and see. So I'm going to say it again. I am still expecting this to break higher. We have what looks like a completed 1. We may come down a little bit deeper over the next week or so into a 2, but sooner or later we've got to get moving higher. If we don't, and we keep meandering every day that we meander, every week, every month, the stronger the bearish argument gets. If we just get above this high and impulse higher after a corrective move, and I think you can say, yeah, we're well on our way, and this is all just consolidation. So for the meantime, I'm going to lean into that and say IWM looks set to move higher. I prefer this interpretation that we've had a wave 4 complete within the prior wave 4 degree, and there's one more thrust up in the markets, and it may well come after a correction in the broader market, after a correction in the techs and growth areas. So we'll wait and see if the small caps pick up any spillover. Right, quick look at the basic technical analysis, and let's clear the count for a moment. Bring up our exponential moving averages. We have a 10 in yellow, 20 in blue, 60 in orange, 250 in green. We're going to come out to the weekly time frame and bring up our momentum indicators. We have an RSI set to a 10 close, with the green 30 level representing oversold and the red 70 level representing overbought. We have a MACD with a 10 for the short term moving average in blue and a 20 for the long term moving average in orange. Okay, and I think what we're going to have to do here, I don't always do this with live analysis because I have so many things already on the chart, but we're just going to bring up the volume for a moment and see if there's anything we can point to suggest that this is a greater period of consolidation. So, alright, on the weekly time frame, above the 10, closing the week above the 10, above the 20, above the 60, above the 250, still trading around this big hump in the volume profile, still looking relatively bullish in terms of price action. What else have we got here? We've got RSI. Now you see we've had this cooling off, this continued cooling off from overbought into the neutral territory in the RSI. We haven't collapsed and imploded and had an actual sell-off. It just feels like we've been cooling off what was an incredibly violent and quick move up in the free, and we've just been cooling off, ready to move higher. That's how it still feels. The MACD has been negative this whole time, red bars on the histogram building up and then shrinking, deceleration of the short-term moving average, starting to flatline. Still no positive turn to momentum, but still trading above the zero bound, still in positive territory overall, just looking for that bullish confirmation of short through long to the upside. Volume seems to have been trading off the whole time, so from the peak here we've been a series of lower highs, so volume is declining while we're consolidating. More evidence that we are doing just that. We are consolidating, we are basing, we are waiting for a tick up in the volume, tick up in momentum, and a thrust higher. These kind of consolidation periods with declining volume, declining MACD, declining RSI, and sideways price movement, they are either a topping pattern or they are a basing before thrusting higher. So we really are in that kind of no man's land. My interpretation, my preferred interpretation, is that we're basing before thrusting higher, but I could be wrong. So let's come down to the day time frame. That's why we have a bearish count after all, isn't it? So on the day time frame, all this momentum in the wave 3 has been slackening off. The moving averages have started to coil around one another. Traded to the 20 on the Friday and closed there. Below the 10, above the 60, above the 250, trading around this big lump of volume. We can see here the volume has been in overall decline. It's a lot less obvious here on the day time frame than it was on the weekly, but it is still here, this general downward trend. Little spike here on the low of the 18th of June. RSI has been doing the same. It's been cooling off this whole time. We can't call divergence anywhere with this high on the 15th of March because we haven't set a new high yet, but generally weaker RSI. The MACD is well off the highs in the MACD from where we were back here on the 10th of February, where we did get bearish divergence between the 10th of the Feb high and the high on the 15th of March, with high and a lower high in the RSI, high and a lower high in the MACD. We had this little flush down, but we got caught very quickly and it didn't result in anything else. Right. And yeah, so I think we'll leave it there for the week. Be interesting to see what happens next week. I did say that a week or so ago, I know. It was like, oh, I think we're going to break out to the upside. I might be coming back to you with a completely different opinion in a week's time. If a correction does occur in the broader market, it will be interesting to see what happens here in the Russell. Is the Russell going to be sensitive to a significant sell-off in the short term if it comes, or is it going to be completely indifferent? Or is it even going to go up? We'll have to wait and see. Alright then guys, thank you for joining me on this technical analysis of the IWM. If you're new to the channel, you like what you've seen, please subscribe, smash the like. Hit the little bell notification icon to remain informed of future video releases. Leave us a comment in the comment section below if you want to. And thank you as always to my Patreons. Your support is greatly appreciated. If you're interested in becoming one, follow the link in the description box below. Have a read of the different tiers, see if anything takes your fancy. And also, if you're not following me on Twitter yet, I have a link to my Twitter feed in the description box as well. Alright guys, take care and I'll be back with you next week. All the best. Bye bye.